Equity funds. Who should invest and when? Good morning, investors. Yesterday I told you something simple. If you can stay invested for 5 years or more, equity funds are where real wealth is built. And immediately I got this question. MV, okay, but which equity fund? Fair question. So today let's crack it open. Simply. Think of it this way. Imagine you are going on a road trip. A smooth highway takes you safely and comfortably to your destination. A mountain road is bumpier, but the views are stunning and the rewards are bigger. Equity funds work exactly like this. The bigger the company, the smoother the ride. The smaller the company, the bumpier, but potentially more rewarding. Let's go through them one by one. Large cap funds. They invest in India's top 100 companies by size. Reliance, TCS, Infosys, HDFC Bank, the giants. The ones that have been around for decades and will likely be around for decades more. Smooth highway, steady growth, low drama. Who should invest? First-time equity investors, conservative investors, retirees who still want some equity exposure. These are your safest entry point into the stock market through mutual funds. When? Anytime. You don't need to time large cap funds. Just start. Flexi Cap Funds. Here, the fund manager freely moves money between large, mid and small companies depending on where the best opportunities are at any given time. Think of it as hiring a smart driver who knows when to take the highway and when to take the scenic route. Who should invest? Investors who want one fund that does the thinking for them. Ideal as your core SIP. Set it up and forget it. Mid-cap funds. Companies ranked 101 to 250 by size. Growing fast, more volatile than large caps, but with significantly more growth potential over time. Who should invest? Investors with at least 7 years ahead of them and the ability to watch their portfolio dip sometimes without panicking. When? Best started during market corrections, when prices are lower. Avoid rushing into mid-caps when markets are at all-time high. Small cap funds. Companies ranked 251 and beyond. High risk, high reward. Not for the faint-hearted. Some of India's biggest wealth creation stories came from small companies that grew into giants. But for every winner, there are many that didn't make it. Who should invest? Young investors with 10 years or more, a strong stomach for volatility, and the discipline to not check their portfolio every day. When? Only during market corrections. Please never chase small caps when they are already up 60 or 70%. Hybrid funds, the middle path. If you are a retiree or someone who gets nervous when markets fall, hybrid funds are your best friend. They invest in both shares and fixed income securities. So when markets fall, the fixed income part cushions the blow. You sleep better and you still grow your money over time. Here is something I want you to remember. You do not need all 5 types of funds. Most ordinary investors do very well with just 2, a large cap or flexi cap as their main fund and a hybrid fund for stability. Start simple. You can always add more later. My WealthWise Pinup rule for today. The best equity fund is not the one that topped last year's chart. It is the one that matches your risk and your time horizon. So are you a large cap person who likes a smooth ride? Or do you like the excitement of small caps? Tell me in the comments. I genuinely want to know. I am MV Suresh, founder MV Suresh WealthWise. For regular mutual fund updates, connect with me on Facebook, Instagram, LinkedIn, YouTube and Telegram. Wishing you good financial health. I'll be back tomorrow with a new tip. Till then, stay wealth wise.